Hey Ian, we're doing the Ian cast again on Friday morning. It's not quite a live stream, but it's much closer to the market open. And once again, just reporting on what's going on. The market looks like it's going to open today. Now let's start off with what's going on with the market. So yesterday, just right out of the blue, just show you that there is still such an emotional component to what is going on. Overall markets up, and then suddenly we were doing our investment meeting, and I was like, something happened, and people
Yeah,
are selling stocks because like of one company's news. It's crazy.
yeah, with the Gilead, the remdesivir trial
Yeah,
yesterday. Yeah, so it was like the markets were acting like they were basing this entire rally off of one trial of one drug. I mean, this drug is being studied in like a lot of trials around the world, and one result seemed to throw off the whole market for like 30 minutes.
and
It was
and the
really
truth is, and the truth is that the markets really have stopped really trading off the news around the panic or around health, and it has for some time been trading around really the recovery, which is when will the recovery begin? How strong will it be? What parts of the market are likely to be strongest? What parts are likely to be earliest? And so it does show you that if you're not really thinking about what you're doing, you really might just sell everything and start to panic again when the
yeah.
market really has long past moved past that.
Yeah, I know. Like, I haven't heard anyone say retest the bottom in like at least a week now. So,
Oh, I think there's still quite a few retest the
yeah,
bottom.
okay.
Still plenty of W bottoms. I have heard that the moderation in like in sort of like the panic and fear is from the W to like I think the more popular letter now is U.
Yeah,
And as you know, we are going for V for victory, a V for
absolutely.
victory. And I believe that really at this point we have been talking in our investment channel in our Slack channel that really at this point you could buy nearly anything.
Yeah, yeah, absolutely. I mean, everything seems to be bouncing. Everything seems to be a lot stronger than it was, even a couple weeks ago. And yeah, we're seeing the most strength, of course, in the America 2.0 stocks. Some of these are already making new 52-week highs, which is something we didn't really see for a while. Last week, I think it was last Thursday, I think 60 stocks made new 52-week highs, which is the highest that we've seen in this whole recovery in one day. So that's a really good sign too.
Right, and also it's interesting to see what's going on, which is that it's generally America 2.0 stocks of the new world, which are seeing more and more buyers, and they are seeing really, if you look at their stock charts, it is a V for victory recovery,
Right.
100%, 100%. And there's stocks like AMD, which are well owned and are within like a couple of percent, like one good day and
Yeah.
they are going to hit new highs, and they will carry entire sectors with it. In other words, you can go look at the results, for example, of the semi industry. Ian,
Yeah. I know.
everyone is telling you that the business is strong and getting stronger, and that into a recovery, in all likelihood, given that there's going to be actually additional demand as people start to lift capital spending, there might be shortages.
Right. Yeah, because these the semiconductor stocks, the ones that are really seeing the most strength are the ones that are playing into this whole software. They power the software, they power streaming, all of these new kind of infrastructures that are being built that got way accelerated by these shutdowns and lockdowns. Those companies are starting to see so much demand for their products, and it's pushing the stocks up to or really close to all-time highs.
Yeah, you know what I call semis? I call them digital steel. To me,
Yeah.
semis are the steel of the fourth industrial revolution of America 2.0. Because if you go back to the industrial revolution, really that's what built the industrial revolution. And
Yep.
semis are building the fourth industrial revolution in America 2.0. And that's a good point, yeah, Ian, to plug our Twitter accounts. You go first.
Yeah, I'm at Ian Dyer Guru.
And I am at Mampili Guru. And also to tell you to subscribe to our channel, give this a thumbs up, comment below. And if you want to get in on the fourth industrial revolution, America 2.0, the best way really in is to get into the stocks that we focus on in Profits Unlimited. It's an exclusive America 2.0 focus service. Profits Unlimited, I believe we've got about 35, 40 stocks. All of them are stocks of the new world. All of them are stocks of the fourth industrial revolution. All of them are America 2.0 stocks. Click on these strong hands above. We'll take you to my special video presentation, phenomenal presentation on America 2.0. And then it will invite you to subscribe, and you will get a report that gives you a stock that is at the heart of the America 2.0 fourth industrial revolution. So click on the strong hands above. All right, Ian, we would be sort of deficient if we didn't talk about oil.
Oh yeah, I know. See, I think it's the first time that oil's ever gone negative, which was a shock to everyone. I bet a bunch of people bought in at like $1, thinking that it was a no-lose trade, and all those people that bought in at that last minute are why it actually tanked to like negative $37. At least that's where it closed on Monday. But yeah, it's a crazy situation. You know, all these companies now have like stockpiles of oil. They don't have anywhere to put any extra oil. So a bunch of people piled into that trade of buying oil super low, and there was nobody to take it off their hands, because in the futures market, if you don't sell, then you actually will get barrels of oil delivered to your house. And none of the speculative traders want that. So they didn't have anyone to sell to, because the oil companies that use futures to actually get the oil don't have any room for it.
Right. I mean, it is also a demonstration of the strategy that underpins Profits Unlimited and all of the service that you run, that I run, that we both run all together as a team, which is that in the end, demand and supply always rules. Like,
Right.
all these people pile into oil without understanding that April 21st was the last day to sell your contract if you don't want to take physical delivery. And at that point, you must actually provide actual instructions, contractual instructions to the exchange saying as to where you will take delivery. Normally, it's not a problem. However,
Right.
with no physical actual use of oil, current, nobody's really driving, storage full up as a result of it, there was no place for the oil to go. And so at that point in time, people were willing to really pay any price really to get that contract off their hands. It actually represented a rising liability. And while oil had never traded at a negative price before, it was always possible that in this particular scenario that it would. And sure enough, it would. And it stimulated then a panic of a significant nature where, as you said, it was negative 37. And for a little while, it stimulated even like a negative price for the next month's contract, which has now been cured. And then, we talked a little bit about shipping in the previous Incast. And then we actually put on a trade in the $10 million portfolio, which once again, if you're interested, there'll be a link below to a service that Ian and I run, which really we put together the service really for periods like this, where there's incredible distress, unusual things going on, and unusual trades that come up. And we have been talking about something that happened as a result of the negative oil price.
Yeah, I mean, like I said, there was nowhere for these companies to store it. Like, all the storage tanks are full, like all over the world. There's nobody to buy it and store it somewhere. So now they're reverting to storing it, in ships. Is one of the, like, oil tankers is one of the places that they're using to actually store oil and not just send it somewhere else. So that's, I think, the first time that we've seen that, at least on this big of a scale too. So those oil tanker companies are bringing in money just having their ships sit there and be a place for these companies to store their oil.
Right. I mean, and so the oil tanker companies, if you go and look, some number of them started to go up in anticipation of this happening, because I believe that they were starting to get filled with oil ahead of this. And
Yeah.
then now into this, there's likely oil tankers that are heading for Texas. There's probably an entire convoy of them heading for all the ports in Texas that can get extra oil to fill them up, because all of those panic traders likely sold the oil to someone that that had this idea and maybe lined up the oil tankers. However, we start to see that trade unfold, and we've put on a couple of oil tanker trades in the $10 million portfolio. If you want to get in on that trade, like I said, you'll see in the description below, we'll give you a link where you can subscribe to the $10 million portfolio. And that's an extension in many ways of, again, a demand and supply imbalance, one of many that we believe is going to actually kind of ripple through this economy, the global economy, which is that as things come back online, there is going to be a series of sort of imbalances that's there. And oil represents one of them. In other words, as a result of all the oil being stored, as oil needs to be transported, there's going to be a lack of ships.
Yeah. Yeah. So they can charge whatever they want, really. That's
right.
I mean, they're going to make a ton from this.
So, and then, shipping rates, which had, of course, crashed as a result of coronavirus, now those are going to get really tight, and now those are going to bid up. And so those shipping stocks, which are very, very levered up because they're bought with debt and they're very sensitive to rates, we believe are going to rocket up. And then the same thing is going to happen as well with dry bulk, which is all the things that currently are not being shipped, which is that many of those ships have been scrapped, set aside, have been mothballed, and there's going to be insufficient number of those as well.
Yeah, and we're already starting to see the futures of the dry bulk shipping rates go up too. So, I mean, people are anticipating a recovery in that also because these ships are able to charge more. Like, for example, a lot of them provide kind of some details into what they're charging, and they've separated their contracts into like the next 45 days, and then they give another rate after that. And the rate after 45 days, a lot of them that I've seen is like double what they're charging over the next 45 days. So the fees are doubling after 45 days, which suggests that a lot of this shipping activity is going to pick back up. And these companies are going to get through this period where they didn't really have much activity. Their stock prices kind of cratered, and now they're going to be bid way back up.
Yeah, and we've talked about this in the last Cast, which is that there's actually like I've been saying that this is going to be the greatest recovery in history, and here's why. And which is that number one, we continue to consume at even while sitting at home, we're still consuming a lot of things. So that's being used up. So all inventories are really being destocked at a pretty rapid rate.
Yep.
And we're largely in sort of pretty much minimal production mode. So we're not making enough to really replace what we're consuming. And then, we're going to come out of this and we will consume more because as we are more active, there'll be more consumption. Inventories will be wiped out. So we got to build that back up. And then there's the third thing, which is that 20 years, people have been running this capital efficient model of saying no inventories. And we can see what the problems are associated with that.
Right. Yeah, now there's shortages of everything. I mean, Amazon had to tell people to stop buying stuff, essentially. That wasn't like, everything that's running out of stock.
Yeah, and so we've been discussing that we are going to see some GDP numbers that nobody probably thought that they would ever see again in their life.
Yeah.
Extraordinary, incredible numbers that are going to cause a huge rocket up in pretty much like we have thus far, really, while we have been said, hey, focus on America 2.0 stocks, and we still believe that will give you the biggest upside because that's got the greatest demand. However, is there an industry today, Ian, that we can think of that does not have upside?
Not from here. I mean, everything went down. Some stocks were down like 80% in 2 or 3 weeks.
Yeah, and amazingly,
like the Great Depression on steroids, that crashed.
Right.
This one, dropped like twice as fast.
And even yesterday, I sent you a text saying United Airlines raised money. So they did an offering and it was fully subscribed. So in other words, people are willing to even put money into airlines, which are essentially inactive. I mean, they might as well have retired their entire businesses, like barely any flights going. And people went in and bought United Airlines stock. So that tells you that, people are really absolutely looking forward. And we both get quite a bit of grief on Twitter for being as bullish, optimistic, positive. You know, that's my hashtag on Twitter, BOP, BOP, bullish, optimistic, positive, for being this positive. And however, this is probably the biggest mistake that people focus on. They focus on today or they focus on the past. And so the numbers are going to be terrible. I mean, everyone knows that.
Yeah, exactly. That's why, you know, we've seen on several occasions like record unemployment, but the stock market is up because when the stock market was crashing at record speed, those numbers hadn't come in yet. Everybody knew that that was going to happen. So now it's already pricing in a recovery, which suggests this is going to happen way faster than people were expecting.
Right, and so you can expect, you know, the regular gloom and doom media will look to, you know, try to panic additional people. And for example, yesterday with the unemployment claims number, 4.4 million, and I saw a number of, attempts to sort of really panic people.
Yeah, I know. Yeah, it like you said when and then the whole thing with that drug trial, you know, tanked the market. Like I think in 3 minutes, the entire S&P 500 went down like at least 1% in 3 minutes, which is kind of a huge spike down.
Right. I mean, which is when you consider it, which is that it's silly to think that, you know, people are basing the entire, I guess, the productive sort of private capacity of this country on one trial, when in truth, the vast majority of the country has seen a peak for some period of time, any
Right.
number of states. And I've been getting quite a bit of grief on Twitter because I put out a tweet essentially being positive, and a lot of people dislike that. We
Yeah.
are bullish, optimistic, positive. That's our view of the world. A number of states, I believe Georgia is taking the lead, Tennessee and South Carolina. I've even
Right.
heard the state of New York talking about opening up parts of the state of New York
Yep.
to business. So every governor is trying to find ways to get their economies moving. Of course, they want to be as safe as possible, and we encourage that, of course. But nonetheless, I mean, you know, they are seeing the same fact pattern that everyone else is seeing, which is that either whether you're counting by infections or you're counting by the number of people that have died, they can see that some parts of their state are ready to be opened. And that suggests, again, that the markets are right. In other words, they have seen that this was going to peak. They have seen that there's going to be a recovery, and they have started to price it, of course, well ahead of the actual numbers or facts.
Yep. And again, the thing a lot of people seem to be missing is that when people do go back to work, these inventory levels are like zero. So it's going to be, you know, 110% production, way more than there was before because they need to make up for all this lost time. And that is going to drive the stocks even higher. So, you know, I think the market could even reach all-time highs way before people expect. And the stocks that we watch with America 2.0 are going to be even before that.
Well, we own a lot of semiconductor stocks, and I feel very good that a significant number of them will hit all-time highs.
Yeah.
Actually, before this year ends. I mean, we've still got 8 months left in this year, and we've got likely, you know, 2 full quarters where things are going to be switched on, and they're going to ramp their capacity up to, you know, I mean, every company will estimate, you know, capacity utilization a certain number, but they can actually go past that a little bit by, you know, if they want to. So capacity utilization, which has been punk for 20 plus years, Ian, is
Yeah,
going to hit 100, 102%, 103%. And that means it's going to be an incredible, huge, massive recovery.
exactly. Agreed.
Yes. So, I mean, we've done sort of like the market a little bit. Let's do our usuals, which is Tesla, Bitcoin, and cannabis. Not a lot going on in cannabis, so we're going to sort of cover that, which is that while the stocks continue to look like they're in distress, the businesses themselves are not in distress.
Right, especially in the U.S., which I've brought up as much as I can because the U.S., especially the U.S. market, is still booming with cannabis because a lot of states, number one, haven't legalized it yet, and number two, the ones that have legalized it are kind of making them look dumb because they're bringing all this tax revenue in. You know, sales haven't really gone down that much despite the lockdowns because a lot of them have deemed these essential businesses, and the biggest companies that we see in the U.S. are actually spending money. They're looking out to go and buy some of these companies that have been distressed. Like these companies in the US, like Curaleaf is one that's making a lot of acquisitions right now. They have cash to spend. And that's a great sign when you see a lot of these stocks that have tanked like 70 to 90%, and they still have all this cash that they can work with. It's a great sign for the cannabis market, especially in the US, but also Canada too.
Well, I mean, the one thing that has been open in my state, and I'm certain in your state, is that the alcohol, and
Yeah,
in my state, it's actually run by the state government. And it does make this whole thing look pretty silly that alcohol is legal and open and cannabis is not.
yeah,
There has been talk that perhaps like in the sort of crisis response, that one of the things that maybe there will be a consensus around, since we have found a way, despite our warring parties and political parties in government, that they found a way to pass stimulus to actually help a number of people, small business legislation. Perhaps they can come together and pass federal legislation and just make cannabis legal around the country, that would give them access to banking, give them access to infrastructure that right now they still struggle around.
yeah. I don't think it'll be long though. I really don't. I think in the next year or so, we're going to see a lot of action taken on that.
Oh, forget next year, Ian. Let's talk about next week. I mean, they can
Yeah,
get this together and pass this. I mean, there's no
yeah,
longer any reason for this to really, I mean, it has shown its value during this period. It has shown that people are substituting this for alcohol. This is something that's inherent in human nature. And people also have shown that they are able to responsibly consume and imbibe it, which has been the great
right.
concern that's out there. And also, if it is legal, we would have less crime. And then there would also be any number of medicinal uses that, when it's illegal, is simply unavailable and not something that anybody can access.
Exactly. Yeah, tons of benefits for sure.
Yeah, I mean, so okay, so I mean, we're still positive, and obviously these stocks have taken it, have gotten hit hard. However, I can tell you, Ian, from 2009, once the market started to move up, it shocked people in terms of what went up and how fast they went up. And once you have that illiquidity work in your favor, and which is right now where cannabis stocks are, they are now so small, they have been accumulated by people that really believe in them, that really understand what the business is. I can tell you that the folks that believe in it are not going to let their stocks away for cheap. And so they drive scarcity. We know that there's value. And once demand comes in, and these are the three critical aspects of going upness that we focus on for across all of our services, you're going to see these things just absolutely rocket up, absolutely rocket up.
Exactly. Yeah.
Yeah. And so let's do now a Tesla, which I believe that they're going to start production again fairly soon.
Yeah, I mean, they were one of the last places to really close. And I think they're going to be one of the first to reopen. And there's such, we've gone over this before with China, but China's auto sales like tanked when they shut down a lot of their economy. But Tesla, I mean, Tesla set all-time record sales while that was happening in China. There's huge demand for their cars there. There's huge demand here. And the Model 3, like by itself, is the top selling electric car in the world, but also outsold every other electric car company, which is pretty impressive. And now they have the Model Y coming out. They've got the Cybertruck. So Tesla definitely is going to be one of the companies that really has to make up for this lost time, because they've got a lot of work to do to even catch up to demand.
Yeah, and if I know Elon right, Elon's been hard at work trying to figure out how to get the Model Y out faster, how
Yeah.
to make sure the Cybertruck shows up on time, maybe a bit early. I can't wait to get mine personally.
Yeah.
And speaking of China, I put up an article for us to read talking about how auto sales in China are booming,
Right.
booming because people no longer want to take public transportation.
Yeah, see, that's gonna be a huge factor too. Where a lot of stuff is going to be moved to autonomous, which Tesla also specializes in. So they're gonna, I mean, the Cybertruck I've heard is going to have it's going to be the first pickup truck to ever have a self-driving feature, which is huge because especially in the U.S., pickup trucks are like the number one kind of car that sells. SUVs are number two. You have the Model Y with that. So people have shown that they do want, a car that has some kind of self-driving feature rather than having to go, do public transportation. It's kind of flowing into this other kind of industry.
Right. I mean, so there's two booms that this crisis is stimulating. One is we believe that as people come back to buy cars, there's going to be a huge demand for EVs in general because that was the direction we were going in. Second, there's going to be demand for more autonomous sort of capability. And then I don't know if you saw ARK Invest put out something that we had chatted about, which is that the once autonomy and autonomous cars become a thing, they will start to take share from sort of regional transportation um, options like Amtrak and some number of regional airlines, because most people would probably prefer to sit in a nice, comfortable car rather than go to the airport, go through security, wait, have all the delays. Of course, would be no delays initially because the number of flights have been shrunk. However, nonetheless, looking out 5 or 7 years, that's where they're going to take market share for autonomous cars beyond local transportation, also would do regional transportation.
For sure. And if you own one, you can rent it out. You can have it perform that service as like an autonomous taxi while you just like sit at home and make money from it. So that's another benefit that you can get from having one of these cars.
Right, it becomes another piece of property that no longer just simply sits there in your driveway or in a parking lot. However, it's actually productive because I believe that the economics of cars are terrible. I mean,
Yeah.
the vast majority of their life, they sit around doing nothing. They just sit in parking lots or in a driveway doing nothing. So we've gotten some grief because last time we said that $1,000 for Tesla by year end. We got some amusing commentary. However, it looks pretty good at this point in time. Tesla stock price is over $700, so it's just $300 away. As production opens up and really as like the spending starts to really surge through the economy, I think like 1,000, I feel is pretty easy.
It should be, yeah. I mean, it sounded kind of silly when the stock was at $200, but I mean, here we are. It already went over 900 before the coronavirus market sell-off. So 1,000 is super doable, like within a few months from now, even.
Yeah, I mean, I think I would think that it actually goes above $1,000 by year end this year.
Yeah.
So we are bullish, optimistic, positive on Tesla, BOP on Tesla. Let's talk about Bitcoin. So we're starting to see some price action now on Bitcoin. I'm sure you saw last night, it's hit 7,500 for the first time, I think in over a month.
Yeah, so we had that big sell-off on March 12th, where a lot of people got, run out of huge levered accounts where they were controlling $50,000, $100,000 of Bitcoin with only $1,000 of their own money. And that's just really asking for trouble in anything. So a lot of these people were forced to sell. It caused a huge sell-off, like across all exchanges, from that one event. And now we see, this is the 7th straight week where Bitcoin has had a positive week. So it's been a lot of buying since then, which shows that demand didn't go away even though it crashed. And despite all the bearish stuff that you see out there on Bitcoin, with it not being a legitimate store of value and everything like that, the market says completely otherwise, or else, when it fell 50% in a day, nobody would have held on, nobody would have bought in. Instead, we have 7 straight weeks of positive action.
Well, in keeping with digital steel as semis, well, for us, Bitcoin is digital gold. It's actually better than gold by a lot. I mean, it's more divisible than gold. It's out to 8 decimal places, which is 1 Satoshi, right?
Yeah.
Yeah, 1 Satoshi. Out decimal places. It's portable. It's out there, and it's actually finite. It's
Yep.
it's like there's 21 million, and that's it. That there's no more of it. And we meant to bring this up earlier, which is that there's also more cash, which is like, I don't know. Have you gotten your stimulus check yet, Ian?
I haven't actually, no.
Okay, well, the stimulus checks are out. the series
Yeah.
out, and you sent that to me saying that a significant amount of, not significant, a significant number of people who got the stimulus check have been buying Bitcoin with it.
Yeah, so there was like this spike. We can put this chart up, but there was like a spike in the amount of transactions on Coinbase that were like eerily close to the $1,200 mark. Like it shows that a lot of people were probably putting that stimulus check right into Bitcoin, which is great because, like you said, all this cash has flooded the marketplace, and it's got to go somewhere. People aren't going to be as inclined to buy like bonds and stuff anymore when rates are low. So stocks and crypto are two areas that are really going to benefit from that.
Bonds, I mean, come on, Ian.
Yeah, I know.
Uh,
Yeah,
Gosh, I mean,
I've never bought one.
but the 10-year bond is paying 0.5%. I mean,
Yeah,
in 10 years, I mean, I mean, at some point in time, I don't know, maybe 15, 20 years out, I suppose. I mean, there's going to be inflation at some point in time. Not anytime soon. It does not look like, but take 0.5%.
yeah,
Bitcoin's a way better bet in our judgment, in our opinion. And then on top of that, you also put up a chart saying, that there's, I believe Bank of America, somebody says there's at least $4.5 trillion with a T,
yeah,
$1 trillion sitting around waiting to go into either Bitcoin, Tesla, Cannabis, America 2.0 stocks. Hey, put some of that in there. We can use some of our stocks to get bid up. Come on, get them going. But there's a lot of money that needs to go somewhere because there's no return in cash. And even with stocks starting to move up, you bet that all the people that felt really good a month ago are feeling a little less good today.
Oh, for sure. Yeah, I mean, yeah, this is going to be this entire inflow of cash into areas that haven't really seen it yet. Crypto, the closest that we've seen was the 2017 bull run, where it went from 200 to over 20,000 or 20,000 about. That's going to be like the closest thing we've seen to this next run in Bitcoin, which we think is going to be 50,000 by year end. I think it could easily be over that. And one of the biggest reasons for that, which we haven't talked about yet this week, is the halving, which is set to happen in just a couple weeks.
May 11th is the date. May 11th, May 12th is the sort of consensus date on a number of websites that I actively track. Normally into the halvening, there's usually a liquidation cycle as miners anticipating the lesser reward actually liquidate and potentially stop mining. However, it looks as a result of the crash that may have actually happened pre-halvening. And given that the difficulty, I forget what the actual word is, the difficulty of the actual process actually rising, it looks like actually the remaining miners are the more well-capitalized miners that are less likely to actually sell. And in other words, we may not see that post-halvening sell-off that most people are anticipating.
Yeah, because we got that big drop already. And, since then, I've seen a lot of Bitcoin mining companies buying other smaller companies' assets for cheap because that kind of drove them out of the market. So they're phasing out already. We've got the bigger miners in, which are here for the long run. So I don't think there's going to be like a huge drop in Bitcoin mining activity like there has been in prior halvenings. And that's going to be great for the price. I mean, we already saw the big drop that you usually would see after the halvening even happens.
All right, so we could see like a very, very big move up. And I believe that these moves we're seeing right now is going to be sustained. So BOP on Bitcoin, and we are pretty much bullish, optimistic, positive on pretty much everything. There's very little that we have found that we can at the very least cannot make really a case for at least a fairly significant bounce.
Yeah, maybe bonds. I don't know.
Oh, you're right. Yeah, we are not BOP on bonds or cash for that matter.
Yeah.
All right, Ian, we've gone through the normal roundup. You say goodbye first. I'll go next, and we'll have another Ian cast next week.
All right, guys. Have a great weekend and happy Friday.
And this is Paul saying bye for the Ian cast.